Make a smart start towards financial success. Your investment of time and money in your college education is the first step in building a secure financial future. Yet, too often, the financial comfort of new graduates just beginning their careers is burdened by financial missteps they made during their years in college. In today's seminar, we will talk about the ways that you can avoid these missteps, making the most of your investment in college. Whether you are seeking a bachelor's, master's, or professional degree, completing college is a crucial first step towards greater earning power. In fact, the average bachelor's degree holder earns over 64% more than the average high school graduate. And the number rises for graduate and professional degree holders, with the average professional degree holder earning more than 3 times the income of the average high school graduate. However, this promise of greater earning power can be marred by poor financial decisions while in college, such as having no short and long-range plan and not saving any money. Chief among these is the accumulation of burdensome amounts of credit card debt. Here are some statistics on credit card debt among college students. 84% have credit cards. 62% of final year students have 4 cards or more. 21% owe between $3,000 and $7,000 on their cards. Final year students carry an average credit card balance of $4,100. And the source for this? How undergraduate students use credit cards. Sallie Mae's National Study of Usage Rates and Trends, 2009. It can be very difficult to get out of debt. Consider these scenarios. Scenario number 1. You charge $2,500, you pay the monthly minimum payment of $50, and your yearly interest rate is 19.9%. How long will it take you to pay the balance? The answer is 9 years and 1 month. And that is if you don't charge anymore. Scenario number 2. You charge the same amount, $2,500, but you pay $100 a month instead of the minimum. How long will it take you to pay the balance? The answer is 2 years and 9 months instead of 9 years and 1 month. By following this scenario, you have just saved yourself $2,150 in interest and paid your card off 6 years and 3 months sooner. You can be in good financial shape when you graduate from college if you play it smart by following these 6 recommendations. Number 1, establish your financial goals. Number 2, separate your needs from your wants. Number 3, create a monthly spending plan. Number 4, start saving and banking wisely now. Number 5, stay on top of your student loan obligations. And number 6, always use credit wisely. First, determine your short-term goals. Think about what you'd like to achieve in the next 3 years. Do you want to buy a car, furniture, or eliminate debt? Next, determine your long-term goals. Think about what you'd like to achieve in the next 5 to 7 years. Do you want to buy a home, get married, or start a business? You shouldn't spend more money than you have, and when you do spend, needs come before wants. So what are your needs? What are your wants? Divide spending into needs, say quarters for the laundry machine, and wants, $1,800 for a spring break trip to Florida. Don't spend on wants unless you can cover your needs. Here is an example of a needs versus wants chart. Creating a monthly spending plan will help you keep your finances under control. A spending plan will help you live within your means and develop skills you will use long after you get your college degree. Follow these steps. Start at the beginning of each month. Pay yourself first into your savings account. Keep track of everything you spend, like coffee, newspaper, magazines, etc. Record all of your income. Pay all of your bills on time. Be sure to write everything down so you can see where you are spending and where you may be able to cut back. Here is an example of a spending plan worksheet, which you also have as a handout. The worksheet is divided into 3 sections. Section 1, income, yours and your spouse's if you have one, and include financial aid. Section 2, your needs expenses. Include items like books, tuition, and interest expense on unsubsidized loans. Section 3, wants. Things that are not necessities, including items like cable TV, lattes, eating out, and the latest cell phone. While developing your spending plan, consider the unexpected expenses that could pop up, like car repairs, fuel price increases, or healthcare costs. Assess your needs expenses first. Prioritize your wants from whatever dollars are left over. Track your actual expenses and compare with your budget. Are you on track? Now is the time to begin a savings plan. Start a savings account. Sign up for your employer's retirement plan, if available. It may seem too early, but it really isn't. When you borrow only what you need. And sign up for automatic savings with your paycheck. What you don't see does make a difference. Here's an example of paying yourself first every month. If you can start with $50 a month, in 10 years you will save about $7,000. If you put $250 a month away in 10 years, you will have nearly $35,000. When choosing a financial institution, there are many options. Financial institutions often compete aggressively for your business. Use this to your advantage. Consider location and hours. Can you get to a branch quickly and easily? Does your bank offer evening or Saturday hours, or will you have to go to the bank on your break during school hours? Find one that best fits your schedule and location. Types of accounts. Does the financial institution offer the types of accounts that you want? Checking accounts, savings account, money market accounts, etc., or special accounts for college students? Interest rates. Savings accounts and some checking accounts add money over time to your balance. Interest rates vary and may require a minimum balance, so shop carefully. Depending on the size of your account and how long you plan on maintaining it, even a small difference in interest can add up over time. Service charges. Financial institutions charge fees for their services. Checking account fees may be based on your account balance or the number of checks that you write each month. Be sure to ask about service fees so you understand what you may be charged. ATMs. Find out how many ATMs your bank has, if they are conveniently located, and if there are associated fees. Online services. Many financial institutions offer services that allow you to write checks and manage your account online. If you are in off hours or just prefer the convenience of banking from home, online banking may be an option. Incentives. Shop around for banks that offer incentives, such as a low minimum balance or free checking. Use your checking account wisely. Record all your purchases, including all debit card transactions. Remember, any debit card purchases are taken immediately from your account. Balance your account regularly. Don't write checks your balance won't cover, so you can avoid overdraft fees. These fees are an expense and can be easily avoided. Take advantage of online banking. This could save you time and money. And remember that debit cards are not credit cards. If you take out a student loan, be sure to stay on top of your loan obligations. If a loan is part of your financial aid award, you may be eligible for either subsidized or unsubsidized funds, or a combination of both. The big difference between the two is when the interest begins to accrue. Subsidized loans are awarded on the basis of financial need. You won't be charged any interest before you begin repaying the loan because the federal government subsidizes the interest during this time. Unsubsidized loans charge interest from the beginning, the time the money is dispersed. until it is paid in full. The interest is capitalized, meaning that you pay interest on any interest that has already accrued. One way to minimize how much interest accrues is to pay the interest as it accumulates. Paying down your student loans can save you thousands of dollars. To illustrate, consider this. You have a $15,000 student loan with a 10-year term and the interest rate is 6.8%. Your monthly payment is $173. The total interest you would have paid over the 10 years would be $5,714. By paying an extra $50 a month, you will have paid your student loan off almost 3 years faster and saved $1,766 in interest. Keep in mind, there is no prepayment penalty on paying extra on your student loan, so anything you send extra can save you hundreds, maybe even thousands. Let's go over the advantages and disadvantages of credit cards. Credit cards have advantages. They enable you to build credit. You need a credit card to rent a car. They are available for emergencies and an immediate cash advance. Some credit cards offer frequent flyer miles. Just be sure to know the terms of the credit card. And you can make online purchases. Many of us purchase online because we often can pay less for what we want. Credit cards also have disadvantages. They can negatively affect your credit. By not having good credit, you are more apt to be charged higher interest rates when buying a car or buying a home, or etc. Debt adds up fast and can take years to repay, making the things you buy 3 to 5 times the original purchase price. If you default on your student loan, these are some of the consequences you face. Your entire loan balance becomes due at time of default. The major credit bureaus will be notified. A collection cost of 15.3% will be added to the principal. 25% of your wages may be garnished. Your tax refunds can be withheld for payment. You are ineligible for additional financial aid, and your school transcripts can be withheld. When you want to get out of loan default, another 18.5% fee will be added. Choosing a credit card can be difficult. With so many offers available, it can be tough to sort out or determine which one best meets your needs. Pay it off. You should strive to pay off your credit card balance every month. Don't charge more than you can comfortably afford to pay. If you must have a balance, here are some things to consider. Interest rates. High interest rates can make the cost of buying now, pay later prohibitively expensive. So consumers are wise to see what the interest rate is and whether it's an adjustable rate or a fixed rate, or an introductory rate for a limited time. Adjustable rate credit cards. During periods when the national interest rates are low, low interest rate credit card offers become more plentiful. Consumers who are used to seeing interest rates offers around 15% might start seeing offers around 9 or 10%. But beware, on the back of the offer, in the grid filled with fine print, there will be a box explaining how the interest rate can change based on the prime rate, the rate the company offers to their best customers. As national interest rates climb, the interest charged by adjustable rate credit cards climbs too. Fixed rate credit cards. Many consumers are best served by choosing a credit card with a fixed rate, even if the rate is a point or two higher than the rate on an adjustable rate card. If the interest rate starts to fall and you find that your rate is fixed at a number that's no longer competitive, most credit card companies will renegotiate your rate to keep you as a customer. Another thing to consider is that credit card companies can charge fees that can quickly add up. Forgetting to check the fees section of the credit card disclosure section, the fine print on the back of the credit card offer, could be a costly mistake. Check out late fees. Most financial institutions charge late fees, and it is surprising how high they can be and how quickly they are assessed. Wise consumers will avoid credit cards that assess a late fee at 1 p.m. on the date the payment is due. The late fees can be quite large. $39 is common. Some credit card companies will raise your interest rates if you have even one late payment. Over the limit fees. Credit card companies know it's embarrassing to use your card to pay for dinner or a new dress, only to have it rejected because you've gotten too close to your spending limit. Many credit cards will continue to be accepted even after a person has gone a bit over the limit, but then charge a hefty fee each time. Annual fees. Most credit card companies make their money from charging interest. Some also carry an annual fee. Cards marketed to consumers with credit problems or include big reward packages are more likely to charge annual fees, which can be hundreds of dollars a year. Annual fees are charged even if you stop using the card until you cancel it. Balance transfer fees. If you have a high balance on a credit card with less than terrific interest rates, you may be tempted by offers that promise to waive interest rates or charge low interest rates on balance transfers. However, some charge a balance transfer fee of up to 10%, which can offset the benefit of a lower interest rate. Also, reward programs. Credit card companies compete for your business by offering their lowest rates and fees to the best borrowers. They also offer rewards programs. Credit card shoppers can choose from rewards such as free gas, cash back, frequent flyer miles, and plane tickets, gift certificates to popular stores, and many more. But do your homework before you sign up for a rewards program and make sure you know exactly what you're getting. We just went over what to look for when applying for a credit card. Now here are some tips for managing your credit card. Choose a card with no annual fee. Use the credit card conservatively. Only charge what you can pay off at the end of the month. Be sure to make your monthly payments on time. Being even a day late, you will be charged a late fee, and that could be much as $35. Mail your payments 10 days prior to the due date. Always pay more than the minimum requested. This could save you hundreds of dollars in interest. Be wary of credit cards that offer free merchandise. Most credit cards that offer free merchandise tend to have higher interest rates. Managing your credit is important, so do not purchase on impulse. Do not charge more than you can afford. Know when your credit card payment is due, and remember to mail 10 days prior to the due date. Do not live a lifestyle you cannot afford. Do not use credit cards for cash advances unless it is an emergency. Cash advance fees usually come with a fee and are at a higher interest rate. The crime of identity theft is on the rise. Recent surveys show there are currently 8 to 15 million victims per year. Protecting your credit and personal information is essential to protecting your identity. Here are a few important key points to protect yourself. Minimize the amount of information a thief can steal. Do not carry extra credit cards, your social security card, birth certificate, or passport in your wallet or purse, except when needed. Always take your credit card receipt with you when you make a purchase. Never permit your credit card number to be written onto your checks. Order your free credit report once a year from each of the 3 credit reporting bureaus, Equifax, Experian, and TransUnion. Remove your name from marketing lists. Call 888-5-OPT-OUT or go online to www.optoutprescreen.com. This will limit the number of pre-approved offers of credit that you receive. When tossed into the garbage, these are potential targets for identity thieves who use them to order credit cards in your name. Never let anyone else use your card. Feeling overwhelmed about your finances? Are you being denied credit? Are your credit cards maxed out? Are you borrowing money to pay bills? Are you only paying the minimum? If you are experiencing any of these, call for help. Talk to your creditors and advise them of your situation. Most will work out a plan to get you back on track. For example, contact your student loan provider and see if you may be eligible for a deferment, which allows you to postpone your payment until you are back on track. If you have tried everything and still feel overwhelmed, it may be time to contact a not-for-profit consumer credit counseling service in your local area. They will be able to make calls to your creditors and may even be able to get you a reduced interest rate and stop any late fees that you may be incurring. These are the 3 national credit bureaus, along with their websites and phone numbers. You are able to order your credit report from each of the 3 national credit bureaus once a year for free. Take advantage of the opportunity to obtain your 3 free credit reports per year. It's the best way to monitor your credit. Pull one report every 4 months. This way you can see if anything has changed over the year. Keep in mind that each of these agencies report to each other. By following these guidelines, you will have a successful future. Your dreams can become a reality. You'll be able to take that vacation, pay off your bills, and buy that new car or home.